let's go to that retail sales number. A lot of people think that's the final deciding factor. We've been saying this about a lot of things,
yes.
but in all fairness, this is the last big economic report before the decision tomorrow. So the estimate is a 0.2% read. If it comes in line with that or softer, in your mind, does that solidify a 50 basis point cut? I know you have your own estimate or our own expectations.
Yes, our estimate is looking at a negative 0.3% growth overall, excluding autos. It's a much better picture, 0.3%, in line with what we saw back in July. A lot of consumers went and bought those cars in July, and now we're seeing the reverse in August. Still, August retail sales could receive a boost, definitely from groceries, back to school sales, and even from a lot of those consumers that went on vacation, and so a little bit of a splurge there on restaurants.
So what do you think it means for the Fed's decision? I mean, everybody has their own opinion about what this means. In your mind, if it comes in softer than expected, again, I know you have a slightly different number,
yes.
but if it does come in below that, what does that mean for the Fed's decision? Do you think that solidifies 50 basis points? Is 25 basis points just all it's going to be?
Well, LSEG is looking at a 25 basis point cut now and in December. Whether we'll have something more in between will depend on the labor market reports over the next 2 months. Now, so what we're thinking will happen tomorrow is that the Fed will hike their unemployment forecast. But when it comes to GDP and core PCE, little to no change. So because of that, that's not enough pressure to really accelerate a bigger rate cut.
All right. Let's talk about your estimates when it comes to restaurant and retail profits.
Yes.
I think this is pretty interesting. So for Q2, you have 14%.
Yes.
Pretty strong growth year over year.
Absolutely.
For Q3, 0.6%, essentially flat, big decline sequentially. What does that tell us about the state of the consumer?
It's definitely highlighting the slowdown that we're seeing with the consumer right now. So after 2 years of consecutive, quarters of double-digit growth, like you mentioned, only a 0.6% growth. There's a lot of factors affecting the consumer right now. It's a election year, the unemployment is flashing red, and on top of that, they're still dealing with elevated prices. So what we're seeing is a lot of volatility in consumer confidence. And on top of that, retailers are warning us not to expect too much from them. We're receiving a lot of negative guidance, and because of that, you're seeing that those expectations for the second half of the year are significantly lower than before.
All right, so you're saying expectations are lower, but you actually gave us a list of stocks where the expectations for a beat when it comes to EPS are pretty strong. Yes. We're going to show them the list right now. So one of them's Amazon, obviously huge online retailer. The other one's The Gap. And then the other one's a name I actually hadn't heard of until you mentioned it. It's Aritzia Inc. I had to look this up.
Yes.
It's a Canadian retailer.
Yes.
So is there something that these three companies have in common? Why do you expect these to beat EPS estimates?
So because of the value proposition, the consumer is all about value right now, and they're only opening up their wallets if they feel that they're getting a good value or discount. And so Old Navy has been a big winner during the back-to-school season and will continue to be so going into the holiday season. And then you have Amazon that's going to have their another Prime event around October, which will boost again October U.S. retail sales. The consumer is all about instant gratification, and we're also seeing that the retailers that have a strong omni-channel presence are the ones posting the strongest same-store sales. And then Aritzia is giving the consumer an experience. When you go into the store, you can sit down and have a free matcha latte while you're shopping.
Yeah, we're looking at that. I've never heard of this company. I look at the chart, up 65% year to date. Is there a brand that they create that a lot of people in America know? Because I know they're a Canadian company.
No, but what is interesting about them is that now they introduced their own athleisure wear, which has lower price points than Lululemon and Vuori and Athleta, and has even cooler styles.